Do you know how your credit score affects the rate you're going to get on your mortgage? Donna Galinsky with Allen Tate Real Estate and Elaine Young with Howard Hanna Mortgage to tell you how your credit score affects the interest rate and the type of mortgage that you qualify for.
Yes. So credit scores for mortgage interest rates are actually laid out in buckets. That's kind of how I like to look at it. So you've got buckets starting at 780 and above for your credit score, and then they go down in 20-point tiers. So 760, 740, 720, 700 on down. The better bucket you're in, the higher your credit score, the better your interest rate will be. And if you have to have mortgage insurance, the better your mortgage insurance will be. When we look at conventional lending, you want to do everything you can to have the highest possible credit score because that really benefits you in the long run. If you are not monitoring your credit on some kind of credit monitoring app, I really recommend it. Something as simple as with your bank or even Experian. One of the credit bureaus can monitor that for you and kind of give you an idea of where you're sitting. And then you have kind of a starting off point for where you think your credit will land.
So typically for a conventional loan, your credit score would be in which buckets?
Preferably you'd be over 720 to get a really strong conventional.
Okay.
740 being better, 760 being better, and 780 being the best.
And then below the 720, you fall into the FHA?
Below 720, most of those clients are going to get better interest rates and better mortgage insurance pricing going FHA. And FHA is nothing to be scared of. It's a great program. It's a great way for clients to get into properties. It's nothing for sellers to be scared of either because most properties in our area are in good condition. So work really well with an FHA. So there's good programs out there, even down to a 600 credit score if you need to be in that we can kind of fit you into and figure out based on where your credit's sitting.
So don't let your credit score scare you.
No. Always talk to somebody, kind of get an idea of what's going on. Your credit score is going to be different on the monitoring services than it's going to be on a mortgage. So when a mortgage banker, mortgage loan officer pulls your credit, you're actually going to find that it's 20 or 30 points lower than your monitoring service.
Remember that?
It's a different scoring model. So we're going to lend you the most money, most likely, that you're going to get from anybody. So it's actually going to be a stronger scoring model. So your credit score is going to be lower.
And when you pull credit, people are afraid that if they go to different lenders and different mortgage pulls will affect their credit score. How many pulls are you allowed in a certain time period?
Well, I don't want to give you a how many pulls answer, but you do need to stay in a 30-day window for credit
mortgages.
pulling. Yes.
Mortgage credit pulling.
Yeah,
Okay.
obviously you don't want to have your credit pulled a dozen times. That's just not ideal. But if you want to go to 2 or 3 lenders and have your credit pulled by them, it's not going to affect your score.
Okay. 'Cause that's something people have asked me.
Yes, absolutely.
Okay. Any other questions on mortgages? Just comment below or DM me and I'll get to Elaine and we'll get you the answers. And let me know how I can help make your real estate dreams come true.